Welcome back to the deep dive. You know those secret strategies that like the ultra wealthy use to grow their fortunes? Well, today we're going to unpack one that might just surprise you.
Yeah.
It's ETFs.
Interesting.
You sent us this article about it,
Right.
wanting the inside scoop.
Yeah.
And I have to admit, even I was surprised
Oh?
to learn how the 1% are leveraging this tool
Well,
that we usually think of as, well, pretty mainstream.
yeah, it's true. We're not
Yeah.
talking about some obscure offshore hedge fund here.
Right.
It's ETFs, exchange-traded funds.
Right.
Same ones you and I can invest in.
Exactly.
But the way the ultra-wealthy are using them,
Yeah.
that's where things get interesting.
Okay, so before we dive into the how,
Okay.
let's make sure we're all on the same page about the why.
Okay.
The article mentions that a lot of high net worth individuals are actually shifting away from traditional investments and putting more of their money into ETFs.
Makes sense.
Why the big switch?
It all boils down to strategy and a keen understanding of how ETFs can be used to achieve very specific financial goals.
Right.
For someone managing a vast fortune, think millions or even billions.
Well.
Diversification isn't just a good idea.
Right.
It's an absolute necessity.
Okay.
And that's where ETFs shine.
How so?
They offer a way to spread investments across a vast spectrum of assets, all within a single, easily managed vehicle.
So instead of like handpicking individual stocks and bonds,
Yeah.
they're using ETFs to cast a wider net,
Exactly.
capturing a bigger slice of the market.
Exactly. We're
Right.
talking equities, bonds, real estate, commodity, you name it.
Wow.
The article even highlights how some are using ETFs to tap into very specific niche markets,
Interesting.
like emerging economies in Southeast Asia.
Wow.
That kind of granular diversification
Yeah.
is something most individual investors wouldn't even consider.
That's pretty impressive.
Yeah.
But let's be honest.
Yeah.
When we talk about the ultra wealthy, taxes are always a big part of the equation.
Right.
I mean, wouldn't these massive portfolios
Yeah.
generate equally massive tax bills?
You'd think so, right.
Yeah.
But that's another area where ETFs provide a strategic advantage.
Okay.
They're structured to minimize capital gains distributions, which can be a huge tax burden for traditional mutual fund investors.
Right.
We're talking about potentially saving millions in taxes simply by choosing the right investment vehicle.
Okay, that's starting to make sense. But what I'm really curious about is this concept of hyperliquidity
Okay.
that the article keeps mentioning.
Right.
Why is that so important for these high rollers?
Think of it this way.
Okay.
Imagine you're trying to navigate a choppy sea. Would
Okay.
you rather be in a nimble speedboat that can quickly change direction or a giant cargo ship that takes ages to turn?
I definitely go for the speedboat,
Yeah.
especially if a storm was brewed.
Exactly.
Right.
And that's the beauty of ETFs. Their liquidity allows for rapid portfolio adjustments in response to market shifts.
Yeah.
You can move in and out of different asset classes with incredible speed and efficiency,
Wow.
capitalizing on opportunities as they arise, and mitigating losses with remarkable agility.
So it's like they have a financial radar system,
Yeah.
constantly scanning the horizon for the next big wave to ride. And their ETF portfolio is the speedboat that gets them there before anyone else.
That's a great analogy.
Thanks.
But it's not just about reacting to change.
So,
The really savvy investors are using ETFs to anticipate what's coming next.
interesting.
They're identifying trends, spotting emerging markets,
Right.
and positioning their portfolios accordingly.
So they're not just playing defense, they're playing offense too.
Exactly.
That's next level investing. It makes you wonder
Yeah.
if they're already anticipating the future.
Right.
What does that mean for the rest of us?
Yeah.
Are we always going to be one step behind?
Not necessarily. The key takeaway here is that ETFs are not just a passive investment tool.
Okay.
They can be used strategically, like pieces on a chessboard,
Yeah.
to achieve specific financial goals.
Right.
And the article challenges us with a thought-provoking question.
I like those.
How can you use ETFs to position yourself for future trends?
Okay. I'm definitely feeling inspired and maybe a little intimidated.
Yeah.
Building a successful ETF portfolio sounds like a lot more than just picking a few funds and hoping for the best.
You're right. It does require a different level of thinking. The article compares constructing an ETF portfolio to assembling a world-class orchestra.
Okay.
Each asset class represents a different instrument section.
Right.
And it's all about achieving a harmonious balance to produce a beautiful symphony of returns.
I love that analogy.
Thanks.
So it's about understanding how different ETFs work together,
Yeah.
like instruments in an orchestra,
Exactly.
to create a well-rounded investment strategy.
Precise. And just like a conductor carefully selects and arranges the instruments, a savvy ETF investor needs to consider the unique characteristics of each ETF
Yeah.
and how it will interact within the overall portfolio.
Okay, that makes sense.
Right.
But there's so much to consider.
Sure.
Diversification, tax efficiency, strategic agility. It's a lot to wrap your head around.
It is.
Where do we even begin to unravel this complex symphony of ETF investing?
That's a great question, and it leads us perfectly into our next segment, where we'll unpack the practical steps involved in building a successful ETF portfolio.
I don't know about you,
Yeah.
but I'm ready for a deep dive into the nitty-gritty.
Let's do it.
Let's take a quick break, and we'll be back in a flash to explore how you can apply these powerful strategies to your own financial journey.
Sounds good. Welcome back. I hope you're ready to roll up your sleeves because we're about to get into the nuts and bolts of building an ETF portfolio
Yeah,
that can stand up to the strategies that we've been discussing.
I'm all ears. But honestly, when you hear about these ultra-wealthy investors making strategic moves with ETFs, it's easy to feel like you need a team of financial advisors and a vault full of cash just to get started.
It's true that the scale of their investments is on a whole other level,
Right.
but the underlying principles are surprisingly accessible,
Oh.
no matter your net worth.
Good.
Remember that analogy we talked about earlier? Comparing an ETF portfolio to an orchestra?
Yeah, I love that one.
Well, let's break down how to conduct your own financial symphony.
Okay, I'm intrigued. Where do we even begin to assemble our instrument section, so to speak?
The first step is to define your investment goals.
Okay.
What's the desired tempo of your financial symphony?
Okay.
Are you aiming for long-term growth, a steady rhythm of income generation, or a blend of both?
Right.
Your goals will determine which types of ETFs you choose
Okay.
and how you arrange them within your portfolio.
That makes sense. But with so many ETFs out there, it feels a bit like staring at a menu with 1,000 options.
Right.
How do we know which ones are right for our taste,
Yeah.
or rather our financial goals?
It's true. The ETF universe can be overwhelming, even for seasoned investors.
Right.
A good starting point
Yeah.
is to consider those broad market ETFs that track major indices like the S&P 500 or the NASDAQ 100.
Okay.
Think of these as the foundation of your orchestra, the string section that provides a solid and diversified base.
So instead of trying to pick individual stocks,
Right.
we're capturing a broad swath of the market's performance with these core ETFs.
Exactly. And as you gain experience and confidence, you can start adding those satellite holdings.
Okay.
Specialized ETFs that focus on specific sectors, industries, or investment themes that align with your individual goals.
Like those ESG ETFs we mentioned.
Exactly.
The ones focused on sustainability and ethical investing.
Yeah.
It's almost like choosing instruments with unique sounds to add depth and texture to your symphony.
Absolutely. ESG ETFs are a prime example of how you can personalize your portfolio to reflect your values.
That's cool.
And there's a whole world of other options. ETFs focus on specific geographic regions, commodities,
Wow.
even those targeting cutting-edge technologies like artificial intelligence or clean energy.
It's incredible how granular you can get with ETFs.
It is.
Finding those niche investment opportunities that resonate with your interests and long-term vision.
Right?
But how do we decide how much to invest in each ETF?
Yeah.
Is there a formula for achieving that perfect orchestral balance?
That's where the concept of asset allocation comes in, which is essentially the art of dividing your investments among different asset classes, like stocks, bonds, and real estate.
Okay.
Think of it as fine-tuning the volume of each instrument section to create the desired sound.
So it's about finding that sweet spot between risk and reward, adjusting the proportions of each asset class based on your individual circumstances. Kind of like a chef tweaking a recipe to get the perfect flavor profile.
I love that analogy.
Thanks.
And just like a seasoned chef knows which flavors complement each other.
Right.
You'll need to understand the characteristics of different asset classes
Mm-hmm.
and how they respond to various market conditions.
Okay.
A younger investor with a longer time horizon might favor a more growth-oriented mix,
Okay.
perhaps with a larger allocation to stock ETFs.
Right.
Someone closer to retirement, on the other hand, might prioritize stability and income generation,
Okay.
opting for a higher proportion of bond ETFs or dividend-paying stock ETFs.
So there's no one-size-fits-all approach.
Right.
It's all about finding that personalized blend that aligns with your individual goals and risk tolerance.
Precisely.
Okay.
And here's a key point that the article emphasizes.
Okay.
Asset allocation isn't a static decision.
Interesting.
Just as a conductor might adjust the tempo or volume throughout a symphony, you'll need to revisit your portfolio and make adjustments as your circumstances change, ensuring your investments stay in harmony with your long-term objectives.
Okay, all this talk about conducting a financial symphony is making me feel a bit more confident.
Yeah.
But I have to admit, I'm still a bit intimidated by the actual mechanics of managing a portfolio.
Sure.
Are there any resources or tools out there to help us navigate this process without needing a conductor's baton?
You bet.
Really?
There's a wealth of information available online.
Okay.
From financial news websites and investment blogs to educational resources offered by ETF providers themselves.
Cool.
And don't underestimate the value of a good financial advisor.
Yeah.
Think of them as a seasoned mentor who can guide you through the complexities of portfolio management and offer personalized advice tailored to your unique situation.
It's reassuring to know we don't have to go it alone on this journey.
Right.
But even with the right tools and guidance,
Yeah.
I think it's important to acknowledge that no investment is entirely risk-free.
Yep.
Are there any specific risks associated with ETFs that we should be aware of?
You're absolutely right to raise that point.
Okay.
While ETFs offer significant diversification benefits, they are still subject to market volatility and can experience fluctuations in value,
Right.
even with a well-constructed ETF portfolio.
Yeah.
It's possible to experience losses, especially in the short term.
So even if we've carefully selected our instruments and arranged them in perfect harmony, our financial symphony could still hit a few sour notes along the way.
That's a possibility, but the key is to focus on the long-term performance
Okay.
and not get spooked by short-term market swings.
Right.
Think of it as writing out a temporary dissonance in the music,
Okay.
knowing that the overall melody is moving in the right direction.
That's a helpful way to think about it.
Yeah.
So it's not about avoiding risk altogether,
Right.
but rather about understanding and managing it intelligently.
Exactly.
Yeah.
And one of the best ways to mitigate risk is through diversification. As we discussed earlier,
Yeah.
by spreading your investments across different asset classes, you're essentially creating a safety net that can cushion the blow if one part of your portfolio underperforms.
Okay, so we've covered diversification, asset allocation, and risk management. What other essential elements should we consider as we continue to build our ETF portfolios?
One factor that's often overlooked,
Okay.
but can have a significant impact on your returns over time, is expense ratios.
Okay.
These are the annual fees charged by ETF providers
Right.
to cover the costs of managing the fund.
So we should be mindful of those fees and aim to minimize them wherever possible.
Precisely.
Okay.
Think of expense ratios as a subtle but persistent drain on your investment returns.
Right.
Every penny you save in fees is a penny that can be compounded over time to help your portfolio grow.
That makes perfect sense.
Yeah.
But with so many factors to consider, it's starting to feel like we need a PhD in finance just to make informed decisions about our ETFs.
It can definitely feel overwhelming at times.
Yeah. But remember, successful investing isn't about mastering every intricate detail.
Right.
It's about establishing a solid understanding of the fundamental principles,
Okay.
utilizing available resources, and seeking guidance when needed.
And one of the most valuable lessons we've learned from these ultra-wealthy investors is their commitment to ongoing research and monitoring, right?
Absolutely.
They're not just setting their portfolios on autopilot and hoping for the best.
Right. They understand that the financial landscape is constantly evolving.
Right.
And they're constantly adapting their strategies to stay ahead of the curve.
So it's not a passive endeavor.
Yeah.
It requires active engagement and continuous learning.
Exactly.
Wow.
Think of it as an ongoing conversation with the markets,
Okay.
staying attuned to the latest trends, economic developments,
Yeah.
and emerging investment opportunities.
That's a great way to frame it. But realistically, how can we keep up with all that information without it consuming our lives?
The key is to find a balance.
You don't need to become a financial news junkie,
Right.
but staying informed doesn't have to be a full-time job either.
Right.
There are plenty of resources available, like financial news websites, newsletters,
Yeah.
and even podcasts like this one that can help you stay updated without feeling overwhelmed.
So it's about finding a sustainable approach to staying informed,
Exactly.
fitting it into our busy lives without getting lost in the information overload.
Precisely.
Right.
And remember, you don't have to become an expert overnight.
Right.
Start with the basics, build your knowledge gradually, and focus on making informed decisions that align with your investment goals.
Okay, I'm feeling much more confident now.
Good.
It's empowering to know that ETF investing is something anyone can learn and benefit from, regardless of their background or experience level.
That's the beauty of it. ETFs have truly democratized investing, making it accessible to a wider range of people than ever before.
I agree.
But before we get too carried away with our newfound ETF enthusiasm, let's shift our focus to the future.
We talked about the rise of ESG ETFs.
Right.
But are there any other trends or innovations on the horizon that we should be aware of?
That's a great question, and it highlights another important aspect of successful ETF investing, anticipating what's next.
Exactly.
What types of ETFs are gaining traction or showing promise in this ever-evolving landscape?
One area that's generating a lot of buzz is thematic ETFs.
Thematic ETFs.
Yeah, these ETFs focus on specific investment themes, such as artificial intelligence, robotics, or clean energy.
So instead of trying to pick individual winners in these rapidly evolving sectors, we can use thematic ETFs to gain broad exposure to the overall trend.
Exactly.
Almost like betting on the entire orchestra rather than just a single instrument.
Precisely. Thematic ETFs provide a diversified way to invest in disruptive innovation without having to pick individual stocks or time the market perfectly.
That's fascinating. It seems like thematic ETFs offer a compelling way to participate in the future of technology and innovation.
Are there any other trends worth mentioning?
Another trend that's worth watching is the growth of actively managed ETFs.
Okay.
Traditionally, most ETFs have been passively managed, meaning they track a specific index or benchmark. However, actively managed ETFs are gaining popularity.
Interesting.
As investors seek to outperform the market and tap into the expertise of professional portfolio managers.
So actively managed ETFs combine the benefits of ETFs, diversification, tax efficiency, and liquidity with the potential for higher returns that come with active management.
Exactly.
Wow.
Actively managed ETFs offer a unique blend of features that can be appealing to investors seeking a more hands-on approach to ETF investing.
Okay.
But before we dive too deep into these emerging trends, I think it's time for a quick recap to make sure we're all on the same page.
Good idea.
We've covered a lot of ground in this deep dive. From diversification and asset allocation to risk management and expense ratios.
Yeah, we have.
It's been an intense but incredibly insightful journey so far.
I agree. I'm learning a lot.
Let's take a short break and come back refreshed and ready to explore the final movement of our ETF symphony.
Awesome. I'm excited. Welcome back to the deep dive. We spent the last two segments unpacking the why and the how of the ultra-wealthy's strategic use of ETFs.
Right.
But now let's talk about you.
Okay.
What are the actionable takeaways you can implement after listening to this, even if your portfolio isn't quite in the billionaire range yet?
That's the key, isn't it?
Yeah.
It's not about copying what the super rich do, but understanding the principles behind their success and adapting them to your own financial goals and circumstances.
So where do we even start? I feel like my head is buzzing with all these concepts: diversification, asset allocation, expense ratios. It's hard to know where to focus my energy first.
I hear you. It can feel overwhelming.
Yeah.
But if I had to distill it down to one core principle, it would be this. Embrace the power of diversification. Don't fall into the trap of putting all your eggs in one basket, no matter how tempting that basket might seem.
Okay, that makes sense. Spread the risk, don't bet it all on one horse, etc.
Right.
But in the world of ETFs, how do we actually put that diversification principle into practice?
A great framework to start with is the core satellite approach.
Okay.
Imagine your portfolio like a solar system. You have your core holdings, those broad market ETFs that track major indices like the S&P 500.
Right.
They provide that stable, diversified foundation like the sun at the center of it all.
Okay, so that's our core our anchor.
Exactly.
What about those more specialized ETFs we've been talking about? Where do they fit into this solar system analogy?
Those become your satellite holdings,
Okay.
orbiting around that core.
Right.
These could be anything from ESG ETFs and sector-specific ETFs to thematic ETFs focused on disruptive technologies or emerging markets.
Ooh.
It's where you can add a personalized touch to your portfolio, aligning your investments with your interests, values, and long-term vision.
I love that analogy.
Thanks.
So we start with a solid, diversified core.
Right.
And then we can get creative with those satellite holdings,
Exactly.
adding those unique flavors and spices to our investment mix.
I like it.
But how do we actually decide which specific ETFs to choose for both our core and satellite positions? There are thousands out there.
Choosing the right ETFs is crucial.
Right.
And it does require careful consideration.
Okay.
Look beyond just the past performance or catchy names.
Right.
Dig deeper into factors like expense ratios, the ETF's track record,
Okay.
and most importantly, make sure its investment strategy truly aligns with your goals.
So it's not just about chasing the highest returns or jumping on the latest investment fad.
Exactly.
We need to do our homework and really understand what we're buying into.
You got it.
That's a great reminder. But honestly, with all the research involved, it feels a bit like we need a finance degree just to navigate the ETF universe.
It can feel that way sometimes.
Yeah.
Are there any resources or tools available to help simplify this process for those of us who aren't financial wizards?
Hopefully. Absolutely.
Good.
Don't be afraid to tap into the wealth of knowledge out there.
Okay.
There are fantastic resources, online financial news websites, investment blogs, even educational materials provided by ETF companies themselves.
Okay.
And of course, a good financial advisor can be an invaluable guide,
Right.
providing personalized advice and helping you build a portfolio that aligns with your specific circumstances.
That's a relief to hear. It's like having a seasoned navigator to help us chart our course through the sometimes choppy waters of investing.
Exactly.
But even with the best guidance, we can't forget about risk, right? Even with a diversified ETF portfolio, we're not immune to market fluctuations.
You're absolutely right.
Okay.
No investment is without risk.
Right.
And ETFs are no exception. Even with a well-constructed portfolio, it's possible to experience losses, especially in the short term. So even if we've done everything right diversified, chosen ETFs that align with our goals, kept an eye on those pesky expense ratios, our portfolio could still take a hit when the market gets bumpy.
It's definitely a possibility.
Okay.
But the key is to remember that investing is a long-term game. Don't panic and make impulsive decisions based on short-term market swings.
Right.
Stay focused on your goals, maintain a well-diversified portfolio, and ride out those inevitable ups and downs.
So it's more about weatherproofing our portfolios for those inevitable storms rather than trying to avoid them altogether.
Precisely. And that's where diversification comes in again.
Right.
By spreading your risk across different asset classes, you're creating a buffer that can help cushion the blow if one part of your portfolio underperforms.
Okay.
It's like having shock absorbers on your financial vehicle, smoothing out the ride even when the road gets rough.
Okay. I'm starting to see how all these pieces fit together.
Yeah.
Diversification, strategic asset allocation, managing risk, being mindful of expense ratios. It's like weaving a tapestry of smart financial decisions to create a portfolio that can weather any storm.
That's a beautiful way to put it. And remember, it's an ongoing process.
Right.
Regularly review your portfolio, make adjustments as needed, and stay informed about the ever-changing financial landscape.
Right. It's not a set it and forget it type of deal.
Nope.
But before we wrap up this deep dive, I want to circle back to something we've touched on throughout this episode.
Okay.
The idea that successful investing requires continuous learning and adaptation. What's the one piece of advice you would give to someone who's just starting their ETF journey?
If I could offer just one nugget of wisdom,
Okay.
it would be this. Start small, stay consistent, and don't be afraid to make mistakes along the way.
Okay.
Investing is a marathon, not a sprint.
Mm-hmm.
And it's about progress, not perfection.
That's such great advice. It's about taking those first steps, finding a rhythm that works for you, and gradually building your knowledge and confidence over time.
Exactly.
Okay.
And remember, even small, consistent investments can grow into something remarkable thanks to the magic of compounding. It's like planting a seed and nurturing it with patience and care.
Right.
Over time, you can cultivate a flourishing financial garden that will bear fruit for years to come.
Beautiful imagery. I think we've given our listeners a lot to chew on today.
I think so too.
From unraveling the strategies of the ultra-wealthy to breaking down the practical steps of building a successful ETF portfolio,
Yeah.
it's been an incredible journey.
It has been my pleasure diving deep into this topic with you and our listeners.
Life-wise,
The world of ETFs is vast and ever-evolving.
it is.
So stay curious, stay informed, and never stop learning.
Well said. And on that note, we'll wrap up this deep dive.
Sounds good.
We encourage you to explore those resources we've mentioned, do your own research, and embark on your own exciting adventure in the world of ETF investing.
Until next time, happy investing.
And happy diving.